Millionaires and billionaires are leaving the United Kingdom. The exodus is underway. And while Switzerland, the UAE, Italy, Cyprus, Malta are all fantastic destinations for high net worth individuals looking for greener pastures, I'm here to tell you that you may be overlooking a very powerful contestant, which is the Republic of Panama. Let's dive right in. Hello, my name is Javier Correa, and I'm the tax director here at the Rothbard Group, where we help so many Canadians, Americans, and also Europeans move to the Republic of Panama to enjoy Panama's great lifestyle, territorial tax system, and lower cost of living. Now, for UK tax residents in particular that are looking for options, I want to give you a major brief, a 360-degree view of the benefits that you can expect as a UK tax resident looking to relocate if you were to relocate to the Republic of Panama. So let's begin. Number one, UK citizens on the immigration side of things can expect very favorable treatment. By just investing into real estate or putting money in the bank, you can either get a qualified investor visa in the Republic of Panama or a friendly nations visa in the Republic of Panama. With investments as low as $200,000 into a term deposit or a property, you can become a resident of Panama very, very quickly, relocate to Panama, and start living the dream. These visas in Panama are actually, in many cases, more affordable than their counterparts in the Middle East or in continental Europe. So major advantage to be had there. Now let's take a look at the more complex side of things, which would be taxation. So obviously many people that are leaving London are looking for, more favorable tax regimes in Europe, in the Middle East, and in some cases even in Southeast Asia. And this is mainly due to the fact that the UK recently, or relatively recently, decided to put an end to its centuries-old practice of the non-domiciled tax regime. For those of you who do not know, the UK for centuries, dating back to the French Revolution, even slightly before that, if I'm not mistaken, had a tax regime where wealthy foreigners could come into the UK and they would only be taxed on UK source income and on foreign income remitted to the United Kingdom, which meant that as long as a foreigner was a resident of the UK but preserved his or her domicile in a foreign country, the UK actually gave you a pretty good tax deal. Well, unfortunately, that has come to an end, and that has meant that many wealthy residents of the United Kingdom have started to look at different options. Now, let's take a look at some of the options you have in Europe and how Panama compares. So this is meant to be a general overview. Obviously, each country has a lot of nuances when it comes to their tax incentives, but I do want to list all of these to see how would they compare against the Republic of Panama. Let's take a look at Switzerland, Italy, and Greece, for example. Those are what I would call the lump sum tax country club, right? So essentially, UK tax residents that are moving to those countries can expect to potentially access a deal where they can pay a fixed amount of money to those countries and essentially not have to pay a dime more in taxes than that fixed predetermined amount when it comes to their foreign income. So when it comes to Greece, that's 100,000 euros, Italy, 200,000 euros. Switzerland is by far the most expensive one, where a lump sum tax deal can go up to the 400 or maybe 500,000 Swiss franc mark. But ultimately, if you're making millions of euros or dollars in foreign income and you move to one of these countries, you essentially pay kind of like a flat fee, and you have a right to live in those countries, which give you a great quality of life, and you are in Europe. So again, not a bad deal. If you go to Malta and Cyprus, which are other two very popular options within Europe, you also have the ability to use a non-dom regime. The exact same non-dom regime that went extinct in the UK is still alive and well in Malta and Cyprus, and actually also in the Republic of Ireland, although I know it's not a very popular destination for many British nationals or tax residents. And so under these non-dom regimes, essentially you get a similar deal to what you would have gotten in the UK a couple of years ago, where you can move to these countries and essentially you're only taxed on foreign income if it's remitted to one of these countries. Now, if we put them on a spectrum, Ireland is by far the most rigid. It is by far the one that will give you the least tax advantages. Malta is somewhere in the middle. It gives you great breaks for capital gains if they are foreign source, where you can remit them to Malta with no additional tax. It does have a component with a minimal tax involved there, but it's relatively low. And then Cyprus is on the other end of the spectrum, where you can remit money more freely, but you do have an expiration date. After 15 years, the Cypriot non-dom regime essentially expires and you become a full tax resident of Cyprus, subject to global taxation like any normal Cypriot resident. So while you can get some interesting tax benefits in these three countries, it is by far not a clean cut where you are easily going to pay zero. It requires very careful planning. And then if you go a bit further to the United Arab Emirates, you do have the lack of a personal income tax, but you do have a business tax that essentially captures most businesses, barring a few exceptions that can operate through the free zones for specific industries. Most entrepreneurs out there are not going to fall into treasury services, fund management, global shipping. Like, these are very specific industries that the UAE has decided to continue granting a 0% tax for in the free zone. So in many cases, people moving to the UAE will not be able to benefit from this. And even individuals that are engaged in business may be subject to this 9% tax on their global business income. So that 0% or that lack of personal income tax can be a bit deceiving. It works well if you have employment income and investment income, but when it comes to business income, looks can be deceiving. Now, let's take all of those examples and compare to the Republic of Panama. In the Republic of Panama, you have a black and white territorial tax system with no time limit, meaning that if you're in Panama for 1 year or if you're in Panama for 99 years, the Panamanian government doesn't care. Your foreign source income is not taxed. That's how a territorial tax system works. If the income comes from abroad, it is not taxable. If the income is sourced locally within Panama, it is taxable. But Panama's definition of what qualifies as foreign and what qualifies as local is actually quite broad. It's actually quite business friendly, meaning that in many cases, you can run your global business empire from Panama, and with the right planning, you can have substance in Panama, offices in Panama, and still legally pay no tax in Panama because you're generating foreign source income. Not many territorial tax systems allow you to do that. Panama does. And again, no time limit. So unlike Cyprus, where you're counting, the days until you hit the 17th year, in Panama, no time limit. In addition to that, the cost of living in Panama is significantly lower than in some of the counterparties I just mentioned. So for example, take the UAE, for example, cost of living in Dubai is significantly higher. Cost of living in Switzerland is significantly higher than in the Republic of Panama. So when it comes to living in a palace, having housekeepers, having drivers, being able to go out to dinner with your wife or your girlfriend every single night if you want to, Panama definitely holds a very strong advantage. When it comes to banking infrastructure, I would also say Panama holds a very strong advantage. I mean, you take a look at Cyprus, Malta, the UAE, the banking infrastructure isn't as strong. I would even argue that in the case of Switzerland, the argument has to be nuanced. Switzerland is very strong for wealth management, but for transactional banking, it can be a bit difficult. Now, granted, Switzerland is very strong on the banking front, so I can't really claim that Panama is stronger than Switzerland, but I would say Switzerland meets different banking needs than Panama. So if you want, easy, day-to-day, business-friendly transactional banking, Panama definitely does have an advantage over Switzerland in many cases. Not all, but in many cases. When we also take a look at the fact that Panama does not require any fixed amount of taxes to be paid, that is also a huge advantage over the lump sum club. So you take a look at Switzerland, Italy, Greece, you are paying hundreds of thousands of dollars, euros, Swiss francs for the privilege of actually living in these countries. Panama's just happy to have you here and spend your money here, and that's it. No need to pay a flat fee for the privilege of essentially living in the Republic of Panama. And I would add that there is another argument that is sometimes underestimated and overlooked, which is cultural alignment and cultural compatibility. I'm not here to talk politics. Everyone has a right to choose whatever works for them. But I work with a lot of Western clients who like to live in the Western Hemisphere. Judeo-Christian values, infrastructure, anything you can think of, they like to live in the West, right? And that's an individual choice everyone has to make. But if you have chosen and if you believe that living in Western society will benefit you or you will feel more comfortable, then definitely here, Panama has a clear advantage. Very North American in terms of its culture, completely Western. Compare that to places like the UAE or places further away like Thailand or Hong Kong, where the culture is fully respectable. It's even admirable in many cases, but it's foreign. It's not exactly Western, and that can create some friction when you want to lay down roots and when you want to live in a country long term. All these things are elements to be taken into consideration. And the last element that I would add on the tax front, which is again often overlooked, is that Panama actually has a tax treaty with the United Kingdom, which can give you a lot of flexibility when you want to run your global empire, as long as you are a clear tax resident of Panama, you have a bit more flexibility in terms of how much time you can spend back home in the UK visiting family members or doing business or getting back in touch with friends. Now, granted, Switzerland, Cyprus, Malta also have their tax treaties, but Panama, on top of all the other benefits I mentioned, also has a tax treaty. So you can't even say that the advantage of going to a European country is that there's a treaty and there is no treaty in Panama. So ultimately, if you take a look at things objectively, honestly, the only major advantage you're going to have by relocating to a European jurisdiction is going to be the time zone, because cost of living and the actual tax benefits you get are going to be better in Panama than they will in any European country. So if you are planning a UK exit and you believe that Panama might be a great option, but it just wasn't on your radar as much as these other places that I've mentioned in this video, and you want to explore Panama as an option and you want all the information, then rothbardgroup.com. We'd be more than happy to service you, and I'll see you next time.